Question. RIO'S Bank recently won the Financial Times Sustainable Bank of the Year award. What exactly is sustainable banking? When we were given the award, the people who presented it made it very clear that it was a mixture of two things, which is, what we do, but also how we do it. And I think in terms of what we do as a bank, we are purely focused and always have been on supporting projects that are delivering a social, environmental, positive impact. That's what the mission is built on. So, all the projects that we lend to, whether they be individuals or companies, businesses, are all doing something that, in some way, is delivering a positive impact socially and environmentally. In terms of how we do it, which is equally important, our business model is built on working with real economy, so we fund ourselves with deposits from real people, mostly individuals, but some businesses, and then we lend that money to real projects that are actually doing things. We know them well, we work with them closely, we have an expertise in the various sectors to which we lend. And what that means is, we're not exposed in terms of lending to some third-party removed derivative product, the risk of which is not really understood, and when that goes wrong, the repercussions are enormous. All of that builds up to an understanding that the return that we seek to achieve is not just about finance. It's about the social environmental impact as well. And so people talk about the triple bottom line that is really important to us, and that I think is a great feature of a truly sustainable bank. Question 2. RIO'S invest in 9,500 projects. What sorts of projects are these, and which are giving the best returns? They're very exciting projects. That's one of the things I would like to say. I mean, they cover a huge range of activities. As I said earlier, they are all focused on making difference in a social and environmental way. So, they're all pursuing social and environmental aims. But if you look across the range of things that we're involved in renewable energy, we're lending to some of the major renewable energy providers in the UK. In the social housing, we're financing some of the big providers of social housing in the UK, such as Medcap and their subsidiaries. And then we're also involved in trading activity, which has a fair trade focus to it. Organizations like Cafe Direct, who are the sort of major hot drinks fair trade provider in the UK. So, a vast range of organizations, all within that firm's social and environmental focus. In terms of return, as a provider of debt fundings, the return for us is merely the interest that we are paid on the loan. Question 3. Do you think that changes in the banking system are necessary? And if so, why? I think the sort of changes that we'd like to see are this focus on banking in what I said before. The real economy, as opposed to creating products and services that are several places removed from the bank that is involved in the business. This notion that we can then, or the banks can then, manage that risk in a way that avoids any danger has clearly been proven to be entirely incorrect. And the consequence was, we nearly saw a complete failure of the banking sector. So, I think more engagement with the real economies in whichever sectors the banks are operating, and also, I think some separation of activities. We've seen various ideas put forward about separating the more stoic, the more investment banking type activity to go about our everyday business. We're all therefore engaged with banks. We are at risk of those banks failing. If those banks are more likely to fail because they're also doing business which is a lot more risky in nature, that seems to me to be entirely inappropriate. And I think some recognition of separation there will be very helpful going forward.